And joining us for a closer look on what's playing itself out on the market scene is Robert Towell from Sasfin Wealth. Rob, a pleasure. Good afternoon to you.
Good afternoon. Good to be here.
Thank you for chatting to us today, Rob. Maybe we can start off by looking at the JSE. Yesterday was not the best day on the JSE, and it looks like that has continued through this morning.
Yes, weak again. European markets are firm, and the US was firm last night, but we're still down 0.5%, led by the banks, which are down, and then our retailers are down 1.33%. Now, if you see some of the earnings that came through from Supergroup and Motors, you can see that there is some stress from the consumer, and that's filtering through to the retailers today as well. So consumers under pressure with these high interest rates.
I also ask you about the rand, still, I would say, waddling along, not really giving any confidence from our perspective, Rob. We've had a conversation, I think, for a full year about how the rand was undervalued, and it's clear that it can become even more undervalued with time and with uncertainty.
I think there's no foreign direct investment coming in before elections. I think also if you see the JSE, the volumes on the JSE are very, very low. Very little money flowing in on the investment side as well. And while that's happening, it's difficult for the rand to strengthen, even if it's undervalued. And then obviously the budget stepping into the reserves and taking some from our reserves, that put a little bit of a wobble on whether we're going to carry on doing that going forward. So I think until the end of elections, the rand's going to battle to get any strength. So we'll have to wait and see. But it is undervalued, and it should be a little bit stronger. But, there's too much political risk at the moment for investors to come in, close their eyes and just buy our relatively cheap equities across the board.
Keen to also touch on what we're seeing in Germany there. We're also seeing consumer sentiments very low but reasonably stable. I must ask you, Rob, the German economy and the impact that it's having on the Eurozone as a whole.
I think high interest rates are starting to bite everywhere. You've seen some issues in the US property sector. Obviously, the Chinese property sector is already under pressure. And in Europe, these high interest rates are really putting pressure on consumers. And they've also had high inflation. So the inflation has started to come down, but Germany really seems to be battling the most. They had a very high spike in cost of living. And then the interest rates are still high. So I think that reserve banks around the world are going to have to start to cut soon. Because you're starting to see the consumer start to tip over at the moment. So it'll be interesting to see when the Fed does its first rate cut. Will it be May? I think the world economies need a rate cut. And Germany definitely impacting the rest of Europe as well. Exports are weak. And, the car companies in Germany are also having problems exporting their vehicles.
Keen to get into some of those company news now, maybe starting off with Motors, revenue up, EBITDA up, but also a profit before tax down. It does talk of a very strained cost environment.
Yeah, so they've got too much stock in vehicles and too much vehicle stock on their books. I think they had about 5 billion worth of stock, and they managed to get rid of about 2.4 billion. They're still left with inventory of about 2.6 billion. So people are really battling to buy new cars at these rates with this high interest rate in South Africa and a constrained consumer on top of that, just with earnings and difficulties with our economy. So they're getting left with a lot of stock. So operationally, they're running really well. And you saw that the Motors, they're quite happy with how they've performed. But really what you need is a consumer to buy their products, and that's who's under pressure at the moment. So I don't see them, being able to recover from that just yet. And we'll need to see how elections happen. And as we start to see interest rates start to come down, you'll see that those new vehicle prices, will come down. It'll be easier to afford those vehicles. But currently, the consumer in South Africa under mass pressure cannot buy a new vehicle.
And based on where we are in the cycle right now, Rob, is this a good time to buy a motor stock and hold it until the tide turns? Because eventually the tide will have to turn.
Well, you hope the tide will turn, right? So I think if you get a good outcome over elections, I think you'll start to see interest rates come down. Yes, and it's probably a good time in the cycle to buy them. And, for the brave-hearted, you would start to buy now before the elections. Otherwise, you'd have to wait for after elections to see how our outcome is and where we're going to move forward, on how private sector is going to impact our economy going forward. So definitely relatively well priced at this stage, but the consumer is still under pressure. I would like to wait, if I was an investor putting brand new money in now, for that first interest rate cut, and then I'll invest.
And then let's touch on Supergroup. They're also seeing an increase in revenues there, but also on that not trickling down to that bottom line.
Yeah, so Super Group's got a little bit too much debt on their Southern African business. They've got debt in Australia, but it's ring fenced and very well secured. And Europe, not too big a debt issue. But in the Southern African area, they've got a little bit too much debt, and you see here they can't translate all of their good revenue growth into operational profit. So operational profit down, then too much debt locally, and what they need there is again the retailer and the consumer to come in and start to buy more vehicles. And then on the logistics side, logistics is cost heavy. They have to buy the vehicles for logistics. So they've got a good logistics business. It's growing, but as it grows, so they have to keep buying vehicles. So free cash flow becomes a bit of a problem, and you want to have debt a little bit lower. So two very good businesses, Motus and Super Group, slightly different on the logistics side. Both very good, well-managed companies, but debt in both of them a little bit too high. And again, you're looking for an interest rate cut and the cycle to turn. And these businesses will start to do very well.
I'll also ask you, when we look at these two companies, Rob, what we are seeing in South Africa is a real strengthening and emergence of Chinese brands that aren't necessarily dominant in Super Group and Motus's portfolios. I'm wondering, with a recovery there, the price point that they offer, are they still able to, fight back in terms of the meaningful market gain that the Chinese brands have gotten? Haval comes to mind immediately, how when people are buying vehicles, you are seeing these mid-priced Chinese brands emerge.
Yes, I think they're doing very well. Not all of them are delivered by Chinese companies in South Africa, so some of them still go through our motor vehicle companies. I'm not exactly sure if Super Group has the license for Haval. I'd have to just take a look at that. But eventually, it'll flow through to their price points, and they'll take some of those Chinese vehicles up, because not all the Chinese vehicles are coming through to a Chinese producer in South Africa who then distributes. So they've still got potential, and yes, they do have some price point issues, but they've got the Hyundais and the Kias as well, which are on a slightly lower price point, but not at the same price point as some of the Chinese new Chinese business cars that are coming in. But I think overall, they'll participate well as soon as interest rates start to come down.
And then touching on Grindrod, that seems to be a company that has been quite defensive through all we've seen. And that's because they're at the right place at the right time. We don't have the detail yet, but from what we know, that update coming up in the next few weeks should be good.
Yeah, so their trading update didn't have any details in it other than it looks really good. Grindrod benefiting from the infrastructure issues that South Africa is having. They own the part of Maputo port, and there's a huge amount of commodities going through that port rather than through South Africa, and also through that rail section. And then a lot of it has been trucked into Maputo as well, which they're doing trucking as well as the rail, as well as the port management. So they've got a really full order book, and that flow of commodities through to Maputo rather than going to Richards Bay, etc., where Transnet has got so much problems, is really benefiting Grindrod. And I think that they've really specialized their business. They've got rid of their bank, and they've really focused on logistics and the ports. A very good business. It's come from about 6 Rand, trading at about 12 Rand, but still producing really good revenue. So a good business to be in, and I think you could probably look for that business to carry on growing for the next 2 or 3 years.
Fantastic. Rob, I want to get your stock pick in a jiffy, but first I'd like us to reflect on counters that have found a favor with your industry peers.
My stock pick, we've been sort of hammering on this one for a while now, the whole emerging market versus developed market trade. I think it's been underperforming for the better part of 6 odd years, but I mean, a lot of that is obviously linked to China. China makes up about 30% of that index. So my stock pick today, I think with the sort of better news we got out of China towards the end of the last week, as the Lunar New Year, the holiday ended, we saw some large upticks, in consumer spending, and I think that was to a large extent what was still keeping China sort of, very depressed up until this stage. We saw some decreases in the 5-year mortgage rates by the central bank. So I think all of that will eventually sort of start to feed in and get investors more positive around China. So from a valuation point of view, the emerging market index is very much a lot better priced at this stage. And I just think, with China turning around, hopefully we can start to see a turnaround in the emerging market index. So Satrix emerging markets call for me.
All right, it's just one ETF, I guess, there as well, the Satrix MSCI Emerging Markets one. Rob, keen to get your thoughts on that one. It's based on the China story.
Well, yes, I think all emerging markets are well priced. South Africa at the moment is, really cheap, but it's whether it's a value trap or not, and really will China start to recover from a really poor last 6 months. They're trying to do, everything right, but they've still got really big structural issues in their property sector. I think it's going to take slightly longer. So I think if you wanted to buy that emerging market ETF, I think you'll do well over 3 years. But I think it might take a little bit longer to get going. And I think China is not a clear cut yet whether China's just going to start to recover. So for me, I wouldn't be buying it right now, but I do think there is value there. I wouldn't just buy it right now. I'd like to see it first. I'm happy to miss the first 5 or 6%, even 10%, to make sure that that China has started to recover. So value there, but I wouldn't buy it right now.
And with that said, which counter are you banking on today?
Well, you say that, but I think South African banks are still well valued. We like quite a few of the banks. Absa's got quite interesting aspects to it. But for me, FirstRand still, it's growing its lending and mortgage books at the right time. It didn't grow it when the interest rates were really low, so they just started to open up the taps in. I think they're well positioned for interest rate cuts at FirstRand, and my pick would be FirstRand anywhere under 66 Rand. I think you're going to do about 12 or 13% for the year.
Brilliant. It's always a pleasure speaking to you, Rob. Thank you so much for your time today. Fantastic. And that was your markets update with Rob Towell from Sasfin Wealth.